Hello everyone. So today we'll be discussing gold and what can we expect from gold this coming week and this coming month as well. So as we have seen on gold, the market has been pushing a bit further to the upside, continue with the rally. So what we'll be looking at is that right now we're currently looking to take potential shorting opportunities just to cause like a bit of a retracement before we can have a bit of a continuation. So right now when we're looking at the monthly time frame is that we can see that on a monthly time frame the market is currently approaching that monthly resistant level whereby right now it has broken above this yeah, resistance, the monthly resistance as well. So as you can see, like we have different resistance, the upper one and then the lower resistance, right? So but like right now what we'll be looking at is that we'll be looking for a potential tap to the upside to retest this level before we have a decline in the value of gold as well. So right now, again, what we can see is that we can see the formation of a cup. This is a cup. So what we need to see occurring is that we need to see the formation of a handle or a bit of a retracement in the form of a continuation pattern before we can consider taking long position, as the market has been trending to the upside for quite some time right now. So again, the reason why we had the push to the upside, again, we can say that like we currently in a impulsive phase. So we had an impulse. After we had an impulse, we had a correction, and then right now we currently within the last phase of the 3 cycles that makes up a wave, whereby we had the impulse, the correction, and then the last leg of the impulsive phase. So the 3 cycles, they are near completion. So we are near completing the 3 cycles that makes up a wave. And then again, the one thing that we can see is that we had an inverse head and shoulder pattern. So this might be one of the reasons why we saw the market pushing to the upside a bit aggressively. But ever since we broke above the neckline of the inverted head and shoulder pattern, the monthly inverted head and shoulder pattern, we have yet to come back and retest the level in which we broke out of before the continuation. But as we can see right now, the inverse head and shoulder pattern movement has been completed, as it started from here, impulse, right? So now it has completed to where it originally began. So we have completed the movement. So right now we're currently looking for the formation of a handle, because what we can see is that again, we can see we have had a cup. So what we need to see occurring, we need to see a formation of a continuation pattern that will tell us that the market has the likelihood or the potential to push to the upside, where we will view this as an impulse, a correction, and then the last leg of the impulsive phase. 1, 2, and then the last leg of the impulsive phase, right? So that's on gold when looking at it from a monthly time frame. So now let's look at it from a weekly time frame. So on a weekly time frame, what we have seen occurring is that the market has been respecting and following the dot theory, whereby we have seen the market breaking above the recently formed highs without breaking below the recently formed low. And then we know, based on the dot theory, the market is considered to be in an uptrend up until a recently formed low has been broken. So we have been forming higher highs, and we have yet to form we have yet to break below any lows. So if you can see here, the higher highs have been broken, and with the market breaking above the higher highs has been doing it significantly so. So right now here we see the lower lows, market came back to the lower high or the swing low, and then came back to the swing low, but never broke it. Always breaking above the swing highs and then continue running or continue pushing to the upside. That's one thing we have seen here occurring as well. So we have seen that break above this level as well. So right now what we'll be looking at is that we'll be looking for either a potential retest of the level in which the market broke out of, and then a continuation, or a break below the recently formed swing low and then pushing price a bit further to the downside. So that's something that we're currently looking at. So now let's look at the daily time frame. So when we're looking at the daily time frame, the one thing that we can see is that we had what? We had an impulse, right? We had a correction in the form of a consolidation, and then we had the last leg of the impulsive phase. So we're currently within the last leg of the impulsive phase. So what I'm actually looking for is that I'm currently looking for a potential tap into 1800 or maybe 1800 price level. So if we can tap on that 1800 price level, that's where I'll be looking for potential shorting opportunities. But again, even though we're looking for potential shorting opportunities at that particular level, we have to take into consideration that now we 1, 2, 3. So we are within the last leg of the 3 cycles that makes up a wave, which is the impulsive phase, and then the impulsive phase is near completion. So again, what we can do to add more confluence into our analysis in terms of determining what to expect next is that we can actually view this in the form of a channel, right? So we have got this upper trend line, first touch, second touch. So right now the market is making the third touch of the ascending channel. So we've got the third touch of the ascending channel. So 1, 2, 3. So I'll probably be looking for potential shorting opportunities around this area here, pushing the price of gold a bit further to the downside while maintaining a proper risk to reward ratio, right? So that, like, if I'm wrong, I know that I will get out of this position as quickly as possible. So you've got this is like a channel, right? So, and again, we'll be looking to take short position upon the breakout and retest of the lower trend line of the bullish channel. And then again, when looking at this again, you can also draw it from this perspective, whereby you have you can draw it from this perspective here, where you get 1, 2, and 3. So this can still be a channel as well, because this is just a false breakout, or you can make an adjustment and draw it from this. Either way, when you're looking at it, this is still a false breakout, but I would prefer that we draw it this way, right? So this is what I'm currently looking at. Upon the third retest, I'm currently looking to take short positions. So let's go on a 4-hour time frame. So when we go on a 4-hour time frame, time frame again, so we can see we are within the last leg, right? So even if we're within the last leg, so this is where I'll be looking to take short positions. And then again, when I'm looking to take short positions, now I'm taking into consideration that we have inner patterns that have formed. So these are the inner patterns that have formed. So within these inner patterns that have formed, what do we have? We have this, right? We have a bullish pennant. So we've got a bullish pennant. So right now, the retest of the upper trend line of the daily channel also confluences with the retest of the upper trend line of the 4-hour bullish pennant. So right now, I'm currently looking to take short position around this area while maintaining a proper risk to reward ratio, because that's the most important thing. What we need to focus more on is minimizing risk. So right now, I'll be looking to take short position around this price level here. So while maintaining proper risk to reward ratio, just minimizing my risk and then expecting more out of the amount that I'm risking. So remember that whenever you risk, you must always look at it as in terms of like a 1:6 risk to reward ratio. So you risk, let's say maybe you're risking $1, so you must risk $1 in order to make $6, right? So that's the one thing that we're currently looking at. We're currently looking to take short position around this area on gold as well. So we're currently looking to take short position. So for now, we'll just like wait for potential formation of bearish reversal candlestick pattern, as right now we pushed into this area with a bit of a strong momentum. So we need to see the momentum slowing down, so we can see on a 15 minutes time frame, this is where we'll probably be looking for our potential reversal candlestick patterns. So we'll just be monitoring this area here for our opportunity to take short positions. So if you have any question, just make sure that you send me a message so that like we can talk about it.